Hello all, I hope you all are well. So as I said last time, I'm going to speak more about the different types of investment avenues. So in this particular video, I'm going to focus on the types of bank deposits. Now, when I speak about bank deposits, there are multiple options that are available for investment. So how do you understand, how do you choose where to keep your money? So let's see. So broadly, if I speak about bank deposits, I can divide them into two main categories. One is a demand deposit and the second one is a time deposit. Now what's the difference between the two? If you look at demand deposits, as the name suggests, the word demand deposit means the money that you are keeping in these kind of deposits is withdrawable on demand. So whenever you are in need of money, you can utilize that amount to make a payment to someone, to pay a check to someone. You're totally free to withdraw it as per your wish. Whereas when we speak about the time deposit, which is also called as term deposit, the amount that you are investing is essentially invested or remains locked for a fixed time period or for a fixed term, and hence the term time or a term deposit. Now let's look at what are the different types of accounts or deposits within these two broad categories. So within the demand deposits, the two categories that you have are, one is the savings account and the second is the current account. So what's the difference between the two? Saving account is opened by non-business individuals. So it could be students, working category employees, then housewives, retired people. So anyone who is not engaged in a business can open a savings account. Whereas if you are a businessman, if you are an entrepreneur, if you have your own business, if you are an entity, then you should be opening a current account because of the kind of facilities that it offers. So you can have an overdraft facility, or you can withdraw the amount n number of times. Those are the kind of benefits that you will get if you open a current account. But like I said, it is only business people who are eligible to open a current account. Now within these two categories as well, or within these two options as well, if you open a saving account and if you keep your money, deposit your money in a saving account, you're going to get an interest in the range of 2.5 to 3%. Whereas in case of a current account, which is for businessmen, which is for businesses, in that bank will hardly pay you any interest. In fact, some of the banks don't pay any interest on the current account. So if I have to weigh the pros and the cons, in case of a saving account or in case of demand deposits, the amount is available to you for utilization at any point in time. Of course, many a times some banks also have some restrictions on savings account. So there may be a restriction on the number of withdrawals that you can make from a saving account. So does that mean that you can't withdraw money n number of times in a saving account? That's not the case. You can withdraw money. The only thing is, if you withdraw money beyond the specified limit, bank may charge you some fees. Now coming to the time deposit. If we speak about the time deposit, the two products that are available under time deposits are, number one, a fixed deposit, and second is a recurring deposit. What is a fixed deposit? Fixed deposit is a deposit where you are investing your money for some fixed time period. So it could be couple of days, it could be few months, it could be for a year, 2 years, 5 years, right? You are free to determine for how much time period you want to invest your money in a fixed deposit. And depending upon the time horizon, depending upon the period for which you want to remain invested, the interest rate is going to vary. So generally, more the time you invest, more the horizon of your investment, more is the interest rate that you will earn. Now coming to recurring deposit. How is a recurring deposit different from a fixed deposit? So I'll say in a fixed deposit, you're making a lump sum investment. You're investing one time and it's for a fixed period of time. Whereas in a recurring deposit, you are investing amounts periodically. So again, you can determine the time frame over which you want to invest your money periodically. So you may say that, let's say I want to invest 500 rupees a month, or I want to invest 5,000 rupees a month. And I want to do that, let's say for 12 months or for 24 months or for 15 months. So you are free to determine the period for which you would want to periodically invest a sum of amount with the bank, of course. And then the bank will pay you return, will pay you interest for the period and the amount for which you have invested. So generally, people who have some goals may go for a recurring kind of a deposit, because at the end of the period, so what is going to happen is you're going to save periodically, and at the end of the period, you're going to get a lump sum amount, right? So you can plan your travel, you can plan to go for higher education, and you can start saving small little amounts on a monthly basis so that you reach to your goal. Now, having discussed these basic types of deposits, let's go a little deeper and look at the types of fixed deposits that are available. The first type of fixed deposit is a regular fixed deposit that I just spoke about, that you're investing a lump sum amount and you are remaining invested for a certain time horizon, for a certain time period. Now, you can get interest either periodically or you can get interest paid at the end of the period, depending upon which option you choose. So that's a simple regular fixed deposit. Apart from that, there's also something called as a tax saving fixed deposit. Now, what does that mean? When you invest in this kind of a tax saving deposit, you get a deduction, you get a benefit under the Income Tax Act. So you're eligible for a deduction under Section 80C of the Income Tax Act. However, the point here is that in such a case, there is a lock-in period of 5 years, which means once you invest the amount in these tax saving deposits, you will not be able to withdraw the amount before the end of the lock-in period. So if the lock-in period is 5 years, I will essentially have to remain invested for 5 years. Okay, so does that mean that for a regular fixed deposit, you can withdraw money before the end of the maturity period? The answer is yes. You can withdraw money from a fixed deposit, from a regular fixed deposit, whenever you are in need of money. Right? Only point is, if you withdraw amount prematurely, that is before the end of your term, before the end of the horizon of that investment, the bank will charge you some penalty and the bank will pay you lesser interest. So let's say the interest for a period of 2 years of investment is 5%, then bank will probably pay you something like 4% or 4.5%. But in any case, definitely investing in a fixed deposit is definitely beneficial than keeping your money idle in a savings account, unless you believe that you require that amount for your day-to-day activities. So basically, both fixed deposit and savings account have their pros and cons. But what if I tell you that there's another product that a bank offers which gives you benefits of both a savings account as well as a fixed deposit? Would you go for it? I would definitely go for it. In fact, I go for it. So what is this product? This product is called as Flexi Deposit. And in fact, different banks have different names. So some banks call it as Money Multiplier Deposit. Some banks call it as Flexi Deposit. Some banks call it as a sweep-in facility. So what essentially happens in this kind of a facility is you can tell your bank that any amount in your savings account, if it goes beyond a particular limit, bank should automatically create a link fixed deposit. So let's say if I have a balance of 50,000 rupees in my saving account and I know that generally I don't need anything more than 10,000. So I can go to my bank and I can say that bank, any amount more than rupees 10,000 in my bank account, in my savings account, please automatically create a link fixed deposit or a flexi deposit. So what's the benefit of that? The benefit of it is that first, you get paid interest at the rate of a fixed deposit. So out of my 50,000 total savings balance, I told the bank that anything about 10,000 you please make a fixed deposit. So accordingly, bank has made a flexi deposit of 40,000 rupees and now I will be paid. So I will be paid an interest that a fixed deposit would get, right? And the second benefit is I can utilize the amount whenever I need it. Meaning, after opening a flexi deposit, the amount in my savings account is 10,000. In a normal scenario, what will happen if you want to make a payment, if you want to make an expenditure of an amount more than 10,000 rupees, you will not be able to do so in a normal scenario. But when you have a linked flexi account or a linked flexi deposit, then you can make a payment or you can make an expenditure equal to your balance in the saving account plus the balance in your linked flexi deposit. Which means, although I have a fixed deposit, although I am being paid at the interest of a fixed deposit, I can still utilize the balance to make a payment, to make some expenditure, or to make a check payment. So again, to summarize, ordinarily, if you had a fixed deposit and a balance of only 10,000 in your savings account, and if you paid a check of, let's say, 15,000, you gave a check of 15,000 to someone, the check would be bounced. But if you have a linked flexi deposit or a money multiplier account or a sweep-in facility, whatever you may want to call it, in that case, even if I make a check payment of 15,000 rupees, the check will not bounce because my aggregate balance in my saving account as well as in my linked flexi deposit is more than 15,000. So that's how you get the benefits of both a saving account and a fixed deposit. Also, how you can open these accounts is very simple. You can either go to your internet banking site and you can opt for these options, or you can go to your bank branch and ask your relationship manager about all these options. So I'm sure by listening to this information, many of you would definitely opt for this kind of a flexi deposit account. And if you do, let me know what is it that your bank calls this kind of an account. And if you like the video, please do like, share and subscribe. Also, do not forget to hit the bell icon so that you get notified whenever I upload new videos. Thank you so much.